Well, members of the Federal Reserve continue to temper the market's expectations around rate cuts. In an interview over the weekend with 60 Minutes, Chair Powell reiterated a March cut is unlikely. And in separate speeches today, Chicago Fed President Austin Goolsbee and Atlanta Fed President Raphael Bostic both declined to comment on timing for future cuts. But Goolsbee emphasized the need for more good data before rates could be brought down. The week ahead is full of scheduled speeches from Fed members as investors eagerly await any further indication of the policy path ahead. With us now is Brett Ryan, Deutsche Bank senior U.S. economist. Hey, Brett, good to see you. So, I mean, it feels like at this point there's not really a heck of a lot of suspense around further Fed speak. The message is pretty much loud and clear at this point. It's not going to be March, and we're not really sure when it's going to be.
Yeah, thank you for having me on the program, Julian. And that's a good point. In a data-dependent sort of forward guidance mode, they don't really know exactly what the right time is going to be. And they probably have a few things that they'd like to get out of the way on the agenda beforehand. As Powell talked about at the last meeting and the last press conference, they did intend to discuss balance sheet strategy at the upcoming March meeting. So that's an important one, I think, that they want to get out of the way first. And as you noted, this is a Fed that wants to be absolutely sure that inflation is on the right path for them to begin cutting rates. The most important thing for them is not to get in a situation where they begin to cut rates and then inflation reaccelerates and they have to reverse that process. So they definitely want to see more data to be sure of that timing. And so, for them, they don't want to get stuck into pre-committing to a certain meeting or date with respect to the beginning of rate cuts. And as long as the economy is, performing as well as it has been, that makes a lot of sense in terms of a strategy.
In terms of how the economy is performing, Brett, I want to get your take. Powell on 60 Minutes said, listen, I'm not, when asked whether they have achieved a soft landing, he kind of said, listen, I'm not ready to go there yet. But what do you think, Brett?
Yeah, I mean, so far you can't really, ding the Fed too much, really. I mean, you've had one of the sharpest rises in interest rates, and yet at the same time, we had 3.1% real GDP growth last year, with core PCE coming down close to target. I mean, on a 3 and 6 month annualized basis, you're essentially back at target. So, it's been a great outcome up until to date, really, with respect to the Fed and being able to, not experience any, significant labor market pain, despite a disinflation, campaign that, historically, when the Fed has had to, push back against inflation to this degree, it's resulted in recession. And thus far, that's not been the case.
Brett, what do you think the Fed is really waiting for when it says we want more good data? Is it just further confirmation that the robust labor market is not going to cause a resurgence in inflation? I mean, what's really going on here?
Yeah, I think it's going to be the realized inflation data, most importantly. And you've seen that with their forecast at the December meeting, how important that of an input that was into their forward outlook. So it's the next 2 to 3 months of core PCE and core CPI data that the Fed's going to be paying very close attention to. And the short-term trends, the 3-month annualized and 6-month annualized, to see if they're still on the right track in terms of making progress towards their 2% goal. I mean, other factors, obviously the labor market is great. I think that the near term doesn't seem to, to show much slowing, even though, the January jobs number is probably a little large, and there might be some factors that have boosted it. But at this point, I think it's really comes down to the inflation data.
And Brett, switching gears, I want to get your take on the commercial real estate market as well, because it was interesting. Powell on 60 Minutes talking about that issue, saying, listen, he thinks small banks are going to close or merge because of that weakness, but ultimately said, listen, I think it's a manageable issue. How are you thinking about it?
Yeah, it's definitely a risk that's out there to the regional banking sector, but it's also been a well-known risk for a significant, a long period of time. So, I think it's one where the Fed has been watching this sector really since 2016, and the valuations It has asymmetric information when it comes to the regulatory side of things, and is probably keeping a close eye on the regional banks with the most exposure. There's likely to be some pain to be felt. Will it be systemic in nature is the key question. And we would agree at this point with the Fed that it doesn't seem to be a systemic risk to the banking sector as a whole. As Pat, think about we removed it in the last meeting statement. They removed the paragraph about the resilience of the banking sector, and that's an important, almost sign of continued health.
By the way, shout out to your team's title on it. So FOMC recap note, March sadness. Yes, we appreciated that with the Fed making it clear that it's not going to be in March, that it is cutting. Okay, so bottom line, putting all of this together, Brett, how many cuts are we going to get and when are they going to start?
Yeah, so our previous forecast had been for about 175 basis points of cuts, but that forecast also assumes a weakness in the first half of the year. It increasingly looks unlikely that we're going to get as weak of a first half of the year as our forecast. So I would say I think relative to our current published forecast, we're likely to see something on the order of 100 basis points of cuts this year, as opposed to what we've had published previously. So there's scope for, as we saw recently, for market disappointment, just specifically with March, as you mentioned, March sadness, and I think that the Fed's tried to push back a little bit in terms of the markets front running, easing, Fed easing, because they're not there in terms of the data they still need to see ahead.
And Brett, I want to get you out of here on this. It seems like, Brett, this is going to be a very politically interesting period for the Fed, because you have Trump out there saying recently, listen, if I'm reelected, I'm not reappointing Powell. And then Senator Elizabeth Warren, she's out there too saying, listen, the Fed should be cutting. She's saying to kind of help out home buyers. Powell at that presser, and then again on 60 Minutes, kind of reiterating, listen, politics is not a factor here. But how do you think Powell and the Fed kind of navigate all this, the politics here?
Well, I think the Fed's going to ignore it. The best way for the Fed to maintain its independence and to do its job is to ignore the politics and stick to the data and what the data imply for the appropriate level of monetary policy. And we think they will do that.